Hey guys, welcome back to the Financial Freedom Channel, where we make your money work hard for you. So today I want to talk about how to pick the best markets for multifamily apartment investing. Now, last month I took a multifamily investing boot camp with a guy named Neal Bawa. And it was fantastic. I can't recommend it highly enough. A lot of what I'm going to be sharing is actually from that boot camp. So I wanted to give him a plug. I spent $400 for 6 two-hour webinars. Webinars covered things like picking markets, picking neighborhoods, finding brokers, finding property managers, setting up syndications, and actually underwriting deals. So I learned a ton in that. If you want to check that out, go to multifamilyu.com. So yeah, I want to get into this. How do you pick the best markets? So there's a number of ways to do that. The first method is looking at the raw metrics. Okay? So what are the important things to look for in a market that's worthy of investing in? So there's a number of different ones. Some of the more important ones: population growth. That's really important, guys. You don't want to be investing in a market where people are leaving. Okay, your vacancies are going to go up. It's not going to work out well for you. Detroit, for example. You know, there's a lot of people leaving Detroit still. So that's a scary place to be investing. Another one is home appreciation. Okay, what have home values done? You know, looking 10, 15 years into the past, also looking a couple years into the future. There's ways to get that information. You want to be ideally in an area that's appreciating. That's important for investment returns. Crime. You know, what is the crime like in the metro? Particularly violent crime. You really want to pay attention to the violent crime. Avoid that if at all possible. It is possible. Avoid the violent crime. Landlord friendliness. Okay. Now, different states, even different municipalities, have different laws about, you know, what a landlord's rights are. So it's important to know what those are. There are states that tend to be more landlord friendly. There are states and cities that are less landlord friendly. So you want to be aware of what that looks like before you get investing into a metro. Home price versus rents. Okay. Now, I live in Berkeley, California. I would never buy and hold an investment property in Berkeley, California. The home I'm in right now is a $1.1 million house. Okay. Now, the rents on this house are $5,000. Okay. So that's $60,000. So let's say that's $60,000 per year in rent. $1.1 million purchase price. You know, that's close to like a 5% rent to price. That just doesn't work out very well, guys. No, buy and hold is not for Berkeley. So you know, if this ratio is too high, if home price to rent is too high, it's going to be really hard to get a cash flowing property. It's going to be hard to make any money in cash flow. If the ratio is too low, that means it's really easy for people to buy houses, which puts your rental properties in jeopardy. for people leaving and buying their own houses. So that's another one to watch. And then the last one I want to talk about is job growth. Okay, you want to be in an area where there's job growth, there's new employers, there's people moving to the area for jobs. If people don't have jobs, you're not going to be collecting rent. So these are some of the raw metrics. If you just want to do your own research, say you have a handful of metros that you're researching, here's some things to pay attention to in order to compare those to one another. So that's the first one. Second one is called the annual public rankings method. Okay? So every year, companies like Realtor.com, Zillow, Trulia, they put out, lists, top metros for investors, rankings. And actually, Neal, the guy I was telling you about earlier, he did a webinar called 2018 Real Estate Trends. That's a free webinar. You can take a look at it. And he actually shows, how different metros rank according to these different ranking providers. So that's another way. Look, what are these companies like Realtor.com, Zillow, Trulia saying are the markets to invest in? So I would, if you want to check that out, go to Multifamily U and check out that presentation that Neal Bawa put together, 2018 Real Estate Trends. Okay, so that's the second one. The third one is actually a paid service, Local Market Monitor. Okay, and that's a paid service for single-family houses, single-family properties. Now, the cool thing about using a service like this for single-family properties is the multifamily market tends to lag single-family by about 12 to 18 months. So looking at Local Market Monitor, when we find the best markets according to Local Market Monitor, there's a good chance that those are going to be the best markets for multifamily in 12 to 18 months from now. So that's a pretty powerful tool. That's going to give things like appreciation for various markets. Appreciations. Shall we give appreciations? Appreciation looking back 12 months and looking forward 12 months. So 12-month forward forecasts as well. There's also a proprietary investment score that Local Market Monitor gives each market, and that helps you take into account what is the risk of investing in this market. What are the chances of losing money versus it being a safe market to invest in. So this is actually one of the reasons I really like Las Vegas. Las Vegas has one of the highest investment scores of any metro in Local Market Monitor. There's a couple that are higher, but the population is fairly small. So Vegas is the highest ranked large metro. So one of the reasons I'm really excited about Vegas. Other things covered, job growth. It gives job growth for each market, and it gives population growth. And also projected rent growth and vacancy rates. Okay, so rent growth and vacancy rates. So I really like Local Market Monitor. I think it's like $2,500 a year. which sounds expensive, if you haven't done any apartment investing. But, if you're putting a bunch of money into deals, especially if you're raising money in syndications, you really want to have the best research backing your investment decisions. So, at the end of the day, $2,500 isn't very much to pay when you're investing in some of these bigger multifamily apartment deals. So that is the third method. The fourth method is called Yardi Matrix. Now, Yardi is a multifamily research and publication company. So they put out reports on the state of multifamily markets across the country. And I'm going to link below the video here to how you can get to these research reports. And these are free reports, and they're specifically for the multifamily market. So this covers things like rent growth, projected rent growth, things like employment, right? Job growth, housing supply. So one of the cool things about this is it'll tell you if there's a bunch of new units that have come online in your metro, as a percentage of the total supply in the market. That might be a scary thing, entering a market like that. If there's too much supply, obviously your prices are going to get knocked down because there's a certain demand. And if supply goes up, that can hurt multifamily investments. You want to pay attention to housing supply. And then there's also occupancy rates. So you can see over time if those are going up or going down, and that trend can be pretty important for multifamily. So that's the fourth one. Looks like I have space here to write the fifth one. That's fantastic. So the fifth one is CoStar. And this is paid multifamily. Now, CoStar, if you get CoStar for one market, say, I just want CoStar for the Las Vegas metro. That's going to be $400 per month for one user. So what is that? Almost $5,000 on an annual basis. This is what the big dogs use, CoStar. And yeah, so that's the most powerful paid software to assess various markets. That'll give you things like cap rates for different classes of apartments in real time and all that stuff. So I think that's all I wanted to cover. 5 ways to pick markets for multifamily apartment investing. Let me know if you're interested in a particular market. Leave a comment. I'm always curious. The way that I narrowed down the markets that I was interested in. So I know that I don't like traveling that much. I don't like flights that are longer than an hour and a half. I'm kind of a pansy in that way. Like flying even home. So my parents are from Madison, Wisconsin. Whenever I have to fly home, it's like it's 2 flights. I have a layover in Denver, and it takes its toll on me. I don't like traveling that far. So my short list for looking at different markets was, where can I get on a direct flight that's less than an hour and a half? So, my starting lists were places like Tacoma, Spokane, Boise, Reno, Vegas, Salt Lake City, those kinds of places. And so comparing those metros according to all these different methods, Vegas is really the one that shines. So that's why I'm diving into Vegas. But yeah, thanks for watching. Hit that subscribe button so you don't miss any future videos. And I'll see you guys next time.